Hi, my name is John Stevenson, the Guaranteed Retirement Guy. Today, we're going to be talking about how to help your money grow and the best strategies to keep it growing during your retirement. Okay, so I talk about annuities a lot, and of course, there's ways to grow your savings in retirement without the use of annuities. Okay, but I want to talk about strategies that will also help your money grow and protect. Okay, I want to be able to protect the principal balance. Okay, that's important to me. So stock market, yeah, you can throw in the stock market. That's easy to do. Throw in an index fund and let it grow. It'll grow during your retirement. Okay, but also when the market's down, it'll also go down. Okay, put it in a CD. That'll grow too, right? So these are all things that we know. You can put it in bonds. You can put it in munis. Okay, there's lots of things you can do to grow it during retirement. But if you're looking for something that will protect against market risk and grow it during retirement, then we're going to be talking about some FIA strategies, some fixed index annuity strategies that work. And then we're also going to look at MYGA strategies. These are fixed annuities that give you a fixed rate of return no matter what. Okay. Both of these are effective as long as you set them up correctly. Okay. There's a wrong way to do this. And there are advisors out there that don't know what they're doing when they set these up. Okay. So I'm going to share my screen and show you some examples on what we would do to help your money grow during your retirement. Now, if you're thinking about income and you want highest income, that's completely separate. You can go to my website, johnstevenson.com, and there are income rider calculators that gives you the highest lifetime income you can possibly get. And then you got other variations, different annuities out there that will also give you lifetime income as well. Okay, so go to my website. You can do that. You can book a call with me there too, or you can book a call. There's a link right below this video. If you want to go into my calendar, it'll go there, and we'll talk about whatever you're looking for as far as growth strategies and income if you're looking for income. Okay, so but you can't really mix the two. I mean, you can, but you won't get the best of two. So if you're going to look for income, get an income rider or get some sort of contract that will give you the highest guaranteed income versus maybe a growth strategy, which we're going to talk about next. Okay. All right. So I'm sharing my screen, and right now we're going to be talking about fixed indexed annuities. Okay. These are tied to indexes, and the insurance company, they're buying call options associated with these indexes. And when the market rises, when these index rise, you are able to get a portion, not all, but a portion of the index growth. And of course, if the market takes a dive, you don't participate in that because these are call options. Okay. When the market goes down, they're not going to exercise these call options. Okay. So it's very plain and simple. You'll also notice that there are some with fees and some without fees. Typically with the fees, they give you more access to the market. Okay. So it just depends on what you're looking for. If you want more growth, then pay the fee. If you don't, then you don't have to. Okay. All right. So the first one, you'll notice this is SBLI. They're giving you the S&P 500. It's a 3-year though. So they're measuring the index over 3 years. So if the market goes really, really well over 2 years, but then takes a dive on the 3rd year, then it's going to be a point to point. So it's going to measure the point to point during that period. And if it dives right down to where it was at the beginning, you're going to get nothing. Okay. So I do like having more interest credits happening like every year instead of every 3 years. So I want to point that out. So you got that. You got the 2-year NASDAQ. You got 2-year NASDAQ, 1-year NASDAQ. I do like that. They're giving you only a 48% participation rate though. So, and that's with NASA B++. So you can get better than that. Anyway, so there's some different fee base. You got 90% participation rate with the S&P, account fee of almost 1%. That's not too bad, but they give you a spread of 3%. So 90% of 10, you're getting 9% minus 3. So you're only getting 6%. But when the market goes up 20%, that's not bad. You're getting a lot, right? So you can go down here more. You can see all the different options. So here's what I want to do. I'm going to, let's see here. I want to, let's see here. Resets annually. Let's do annually. Okay. So we want growth every single year. Okay. That's better. And then I'm going to just take off the fees. You already know what the fees, and there's nothing wrong with fees if you're getting something for it. So if they're getting you a higher cap, higher participation rate, it might make sense. Especially if you got a roaring market and you want to take advantage of it, that could be a good thing. Okay. But right now I'm just saying, all right, I don't want any fees. Okay. Makes it easy. And I want to make sure that I get growth every single year. So every single year, if my index has experienced growth, I want it. Okay. I don't want to wait 2 or 3 years. Okay. All right. So you can see security benefits, 80% with a spread of 3 with the S&P 500. You got NASDAQ, the Aspida's offering, and there's no spread. There's no participation. Well, the participation rate's 40%. So if it does 10, you're going to get 4%. Okay. But if it does 20, well, you're going to get a whole lot more, right? So it just depends on what you're looking for. Silec, let's see here. Ocean View, wow, that's not bad. 10.75% cap. That's pretty nice. So that's a higher cap. S&P 500, they're only giving you a participation rate of 58%. So there's different ones out there. I do like this. So look at Life of the Southwest. So they're owned by National Life Group. They're A+ rated. And the Zenith Growth product is actually phenomenal. Okay. It's 9 surrender years. But if you have 9 surrender years, you're probably going to have more growth, because a lot of times if you have a longer surrender charge period, they're going to keep the caps higher. They won't drop it drastically like on some of the other ones. Okay, so let's look at this. So, all right, well, what if let me just look at the index performance. Let's just take a look at this here. Yeah, look at this. It's just crazy. Some of these, I mean, we've had a phenomenal market. Let's just, it's been great. So obviously you'll get some decent performance, but look at that. There's a time where it wasn't so good in 2022. Okay. So, but we've had a pretty good run up. It doesn't mean it's going to continue. Okay. So just keep that in mind whenever you're looking at these illustrations. All right. Let's see some more. See what we got here. And I'm going to show you after this the guaranteed ones, just so you can kind of see an idea. Lincoln Financial, they're a good one too. They're only giving you 55% though of the S&P. But let's look at that. We'll just illustrate that, just kind of give you an idea. So if we look at that and say, all right, what if I get 55% of the market? And let's say the market's done exactly what it's done over the last few decades. Okay. Well, here's what $500,000 will do. You can see all these growth rates here. Over 10 years, it grows, it doubles, grows to $1 million. That's not bad. Okay. That's as long as they keep the participation rates where they are, or the cap rate. So if they lower it significantly, that'll affect these returns. But on the other hand, they could increase them, which will also increase your returns. So just keep in mind when you're looking at growth strategies, these are hypothetical, as you know. So usually what I recommend is just book a call with me, because I can show you the ones that have been known to keep their caps and participation rates high. And we can look at putting you in a situation where you have the highest potential of growth. And of course, you have the market protection. Okay. All right. But let's say you were just thinking, you know what? I just want guarantees. Okay. I don't care about higher growth. I want guaranteed. I want to take advantage of high rates right now. Well, look at those. So let's go over to top MYGAs. And the MYGAs, the easiest way to explain them, they're annuities that are acting like CDs. The difference is they're not FDIC insured. They're state insured. And the money is not, the earnings are not taxed every year. They're actually tax deferred, even if it's non-qualified money. So if it's not in an IRA, it's just coming from your bank account, you're not going to be taxing the earnings until you pull it out. So that's pretty nice. So if you want to lock it in for a long period, I'll just show you here. 9 years, what is it? It's like 5%, $500,000 is going to grow to almost 800,000. Okay, look at 10 years. It's going to grow to 850,000. They got 20 years. It's going to grow to $1 million. They got a step rate though. So the way those work is it starts you out at a smaller rate, and then it steps it up every few years. I'll just show you real quick, just so you can see. It's always interesting to look at these. All right, step rate. All right, 3.65. You see in the first 5 years, that's what they're paying. You can see the earnings here, $18,250, right? And it's simple interest. It's not compounded. You notice that too. So then it steps up to 4.65. Then it steps up to 6.65. And then it steps up again to 7.65. Wow. You're like, wow, that's huge. Yeah. It's not compounded though. Okay. So that's the difference. So that's why when you look at the overall yield to surrender, it's 3.85. Still not bad over 20 years. It's more than you could have got a few years ago, but just keep that in mind. So if you're thinking, hey, I don't want to lock it in for 20 years, most people don't, then look at a 10-year. And if you're thinking, hey, I want highest rating company, then the highest, and this is just showing the top 3 in the 10 years. There's tons. Okay, I can go in here and say, all right, well, let's look at the just the 10 years, okay? Term is 10 years, and that's it. All right, now you see Heartland, you see Farmers, Ocean View. Again, you can see the highest is 5.5. Look at this, Ocean View is actually decreasing their rate here in just a few days. So, but yeah, you can just see all the options. These are all the 10-year options, okay? Maybe you're in love with Penn Mutual. Well, they're giving you 4.5%, okay? Lincoln Financial. Reliance Standard, A++, not bad, but they're only giving you 4.9, okay? So if you go up here and say, well, I want the highest A-rated, then 5.4. It's no brainer. Okay. You look at Ocean View, that's awesome. Okay. And it's really nice to be able to illustrate that, and you can see the growth over time. And this one is compound interest. So 27,000, 28, 29, you see how that grows over time? By the last year, you're earning 43,000 on a $802,000 balance. You got a total of 346,000 in guaranteed earnings, okay? So you might get more in an FIA, a fixed index annuity absolutely can give you more. And if it's with a company like National Life Group, you probably will get more. But remember, it's hypothetical, okay? You do not know exactly what the index is going to do. If the market's going to do great over the next 10 years, then you're going to do phenomenal. But if it does flat, then you might be thinking, man, it would have been nice to have a 10-year with Ocean View that's paying me 5.4 compounded every year. That's pretty nice. So there are different options for growing your money and protecting it in retirement. And with annuities, you can do a lot. You absolutely can. You don't have to use an annuity, but that's what I specialize in. And if you want to talk about annuities, you can book a call. There is a link below this video. Goes directly to my calendar. Or if you just want to check out the MYGA rates, go to my website, johnstevenson.com, and you can check out all the MYGA rates. It's updated daily. You can book a call there too. You can't check out the FIA though. You can book a call with me because as you can see, there's just a lot that goes into it. So, and those change all the time. The participation, the cap rates change. And so it's best just to book a call with me to talk about a FIA. Okay. And book a call to talk about a MYGA too. I have calculators in there for income products, but not for a FIA, just for growth because they're just all over the place. So anyways, I hope this has been valuable. If you're looking for an annuity and you're looking for someone who's in your corner, someone who's going to show you everything regardless of what he's getting paid, okay, someone who's not going to try to sell you, especially when you book a call. A lot of people are afraid I'm going to try to sell them. I'm not going to try to sell you anything. I will just show you everything that's available and then you decide if it's something that works for you. Okay. Of course, I'd love to sell you an annuity, but that's up to you. Okay. So I really appreciate you watching. If you've enjoyed this video, okay, if you enjoy my content, I hope that you will like, I hope you'll subscribe, I hope you'll share it. And if you got questions, I hope you will put them in the comments below because I absolutely will answer them. So thanks again for watching. Really appreciate you, and we'll see you next time.